Hey everyone, and welcome back to the channel. Let's dive right into the world of precious metals because there's been some interesting movement with gold. If you've been watching the charts, you've probably noticed that gold prices have been trading a bit lower recently. So, what's causing this dip? A big part of the story is a fresh wave of optimism surrounding US-China trade relations. Whenever it seems like these two economic giants are getting closer to a deal or tensions are easing, it tends to boost investor confidence. When that happens, money often flows out of safe haven assets like gold and into riskier but potentially more rewarding investments like stocks. Think of it this way: when the seas are calm, sailors are more willing to venture out for a big catch. When a storm is brewing, they head for the safety of the harbor. Gold is that financial harbor. Right now, the positive signals on the trade front are making the market feel a bit more adventurous, which is putting some downward pressure on the price of gold. It's a classic risk-on, risk-off scenario playing out before our eyes. But hold on, the story doesn't end there. The trade news is just one piece of a much larger puzzle. The real main event that every trader and investor has circled on their calendar is the upcoming Federal Open Market Committee, or FOMC, meeting. This is where the U.S. Federal Reserve will announce its latest monetary policy decisions, especially concerning interest rates. Why is this so important for gold? Well, gold doesn't pay any interest. So, when interest rates go up, holding cash or bonds becomes more attractive, which can make gold less appealing. Conversely, if the Fed signals that it's going to cut rates or keep them low, it makes holding a non-yielding asset like gold more competitive. This can often send gold prices soaring. So, while the trade optimism is currently setting the tone, it's really just the opening act. The FOMC meeting is the headliner. The market is holding its breath, waiting for any clue from the Fed about its future plans. Will they be hawkish, suggesting higher rates are on the horizon? Or will they be dovish, hinting at a more accommodative stance? The answer to that question will likely dictate the next major move for gold prices. It's a fascinating situation where short-term sentiment is clashing with a major, upcoming fundamental driver. We'll be watching closely to see how it all unfolds. Thanks for tuning in today. If you found this breakdown helpful, please hit that like button and subscribe for more market insights. See you in the next video.